Hello, everybody. My name's True Demon, and I am the Devil's Stockbroker, and we are live covering the stock market for Power Hour. Welcome, everybody. Thank you for joining. If you're new here, if you wouldn't mind, please dropping a like just as you're walking in. Subscribe if you're new. And throw me all of your requests for technical analysis that you would like. We'll go ahead and start with some of our favorite tickers, along with the overall market. Excuse me, had to take a sip of coffee. All right. Let's go ahead and start with GameStop. It's pretty much on track with what I assumed was going to happen this week. So far, GameStop is beginning to track its way towards this floor here down at $19. This is precisely the area where we typically see GameStop bounce. Let's zoom in here down onto the 10-minute chart and get a little bit closer. So it's always difficult to predict the most volatile move, but we're going to try. Seeing GameStop where it currently is, we've got a parallel channel that has started from here and made its way down to this floor. The first opportunity that we see a double bottom here, specifically after a bullish cross up on MACD, typically on the 30-minute or the 1-hour chart, and then bullish divergence on the RSI. You can see we've got a lot of bullish divergence on the RSI for GameStop in the last, let's see, the last 3 down moves. We've had a bottom here, and a bottom here. Each of these resulted in a higher low on the RSI. So that's a lot of bullish divergence. We've had multiple cross-ups on the MACD and several touches outside of the price cloud. So you can see that GameStop is getting hammered hard, but that pressure is eventually going to have to let up. Let's see, GameStop bounced off of a low at 1959. Now we need to see if it establishes a new low or if it simply just rejects the lower band of VWAP. If that is the case, then we may see GameStop begin to bounce. Always difficult to tell, but the volume direction candles is what I like to use to get a kind of an idea of when a bounce is coming after a long downtrend. And these crosses or these bounces off of the moving average line tend to be pretty consistent about big upswing. So they're more like swing trading opportunities or overnight day trades. They're not like massive bullish moves. Something like that, you need to go further out on a timeline and go look for other consistencies with significant moves. And again, volume direction candles by JD is the ticker or is the indicator that I like to use for that. Volume direction candles by JD. This is an excellent indicator pointed out to me by that guy Astro once upon a time. As you can see, bounces off of the plateau on this volume chart do typically appear right after double bottom patterns or inverse head and shoulder patterns. Things like that. So those are some things to look for. GameStop is very close to a bottom here. Just based on technicals, it does look like it has a lot of strength here. This channel, if it breaks this channel to the upside, that would be my immediate buy signal. I wouldn't really wait. It's pretty close there already. And it already bounced off of that lower price level of $19.59. That does act as a floor for GameStop, so that'll be difficult for it to break. Let's move on to AMC. AMC's got a very similar setup. I was calling this out in my latest video not too long ago. So it is tempting to break down. The market is pushing everything down right now, so we have to see what this what the reaction is from this candle. Do we have some new news? A lot of heavy pushback. AMC raised $162 million through the sale of AMC preferred equity units. Also gained a new theater from ArcLight Cinemas, which is now no longer in business. ArcLight Cinemas used to be part of some of the biggest theaters, one of the biggest theater chains on the West Coast, specifically in California. They had some of the most beautiful and opulent theaters in the world. That's a kind of like a crown jewel for movie theater chains. Okay. So, I know that nobody likes to see it, but we still need to see a reaction from AMC, and the day's not over yet. So, this candle is pretty far down. In order for this to double bottom, we need to see this candle recover rapidly and create a large wick. What you want to see is for that candle to close in between these two lines of support. That's how you get a double bottom pattern. So as long as the candle closes above this line, that is a confirmed double bottom. It also needs to have a secondary confirmation candle the following day above this level as well. So basically, it cannot close in this area. Otherwise, the double bottom is invalidated. So that's what to watch for AMC. I do feel it's very close to a bottom. This is the lowest price I've seen AMC even since before I got into it. On the daily, we've got a couple of other signals that you can look to. We have a MACD crossover pending. The RSI is just moving deep red. The momentum is way, way red. This is probably the biggest sell-off in AMC in terms of momentum that I've seen. I had something to compare it to. Yeah, probably since April of this year, back when the market dumped. It was the biggest fall from AMC after all that pullback. Yeah, the only selling periods for AMC that really compare to it are these. This one being the closest one. Call Trey. I'm sure Trey's doing just fine. I'm sure Trey's doing just fine, guys. Okay. Meat Jacket says that TD Ameritrade will no longer allow me to direct route AMC orders to the lit exchange. Did they take that away? When did they take that away? I'm looking at it. I'm looking for it. I don't have TD Ameritrade. If somebody else is in the trading floor that can confirm that, if anybody's got Thinkorswim or TD Ameritrade market trading, that's sketchy. Technically, they're not legally obligated to offer you direct routing capability as a part of their brokerage platform. It's not required by FINRA. But the fact that they had it and that they removed it now is very sketchy to me. It tells me that we were onto something, at least for a time. Sounds like it's time for brokers to start losing customers. Boomer Assassin says he's putting on Apple puts, short dated. I also was looking to short Apple. The movement of Apple showed me that it was breaking support here, setting up lower lows on volume direction candles and losing a lot of momentum. I haven't traded it since we had that big run back in the first week of December or second week of December, right after the CPI print. We got this big move. Wow, Apple's just dumping, man. Just getting destroyed. Hey, Snook. Nice to see you, dude. Rick Austin, I will be covering BBIG in a short while. I'll go ahead and queue it up here in the list of tickers to cover. Now, Odeon, close to me in the UK, has shut down immediately. AMC owns Odeon, so it makes me sad seeing that, says Andrew Lynn. Yeah, AMC wasn't having as good performance in its European theaters. That was a problem even before COVID. I'm not entirely sure what was the precipitating factor for that, but I understand. It's sad seeing like your favorite movie theaters closing down. I used to have a drive-in theater when I was a kid. Not too far from where I lived. I remember going to the drive-in theater, and man, that was so much fun. And they're all gone. Like the drive-in theater that I grew up, that was open where I grew up, is still there to this day. I don't know how they stay in business, but I guess people just love going there. It's like a big event. Cosm J Pong says Cosm going to $5 to $6 zone. What do I think? Well, Cosm I think is finished moving. So Cosmos Health. This is one that I am doing a lot of research on. I'm really, really digging into this one because of what happened here. I have a very loose theory that I'm not willing to share right now because I don't have definitive proof. I'm still gathering information. But I have a feeling that there was something that broke in the market that resulted in this. This doesn't seem to me like the one thing that I do want to tell people right away is that reverse splits do not equal squeezes. I don't know why that was the first conclusion that people started jumping to on social media. That is absolutely not true. Reverse splits do not automatically mean good things for a company. It's not true. Reverse splits are an action, it's a corporate action of last resort because it reduces equity of the company and consolidates the value into fewer shares of stock. A company will do a reverse split when it has no other option in order to remain listed on the exchange. 9 times out of 10, when there is an announced reverse split, companies will get attacked by bears, just driving the price down as fast and as hard as they can. It draws an extremely aggressive shorting crowd because reverse splits scream that the company is financially weak and they don't have the capability to do a stock buyback. And that would normally be how a company would try to remain listed on the NASDAQ before resorting to a reverse split. If a company is doing reverse split, it's because it's in trouble. It's not because they want to effect a squeeze. They can be strategic about how and when they do their reverse splits in order to hold on to as much equity as possible. But it really, truly is not a good thing. Reverse splits do not automatically mean good things for a company. So for those people that are saying this on social media all over the place, please really think about what you're talking about. Like, really do your research, because it's what you're saying is statistically so false. You cannot look at Cosmos and say that, oh, this will happen with every reverse split. No, that doesn't happen. Most of the time, it's a move in the opposite direction. It goes back down through the floor. That's what happens 9 times out of 10 with a reverse split. The same thing happened with Accela. Like, people like to bash me because of a bad call on Accela. Accela was a bad call on my part, and the reverse split came out of nowhere. If I had known that the reverse split was going to come an entire 6 months early, I never would have called it. So Cosmos is an outlier. Like, it's a fascinating case study. This is a stock that I'm kind of obsessing over right now because I want to understand what the conditions were that caused this to happen. So it's worth paying attention to. This is a stock really worth researching because this is an anomaly. This does not happen very often. I've never seen a stock that reverse split and moved this much. This one is very unusual. But as far as its valuation, I would have to agree that it's probably going to retrace back to this floor here. At the very least, I would expect it to start to find some support around $7, since it bounced off of this zone in pre-market. We'll have to see how it reacts there. I don't even know what the financials of this company are, to tell you the truth. So this one has this one's got me stumped as far as like valuation goes. But somewhere in this range between $6 and $7, I would say that that's the more likely zone for it to retrace to, with the possibility to go back down all the way to $5. It could even go lower than that, honestly. Like, I don't know what the situation is with the company. I haven't done enough research with the company itself and its finances to decide whether it is, undervalued or not. What I'm really looking into is, why did this move happen? Why did this happen? Because it doesn't make any sense why this occurred. So Mercute, TSM, yes, I will be covering TSM. I called that one out in my video from this morning. I actually recorded that yesterday. Really wanted to do some research on what the semiconductors market was doing. But I'm going to go ahead and jump back over to BBIG now. We've covered AMC, GameStop, and Cosm so far. It's time to go look at BBIG. BBIG is getting very jumpy right now. The volatility is starting to catch my attention. So we had bullish divergence that occurred 2 times now in the market, actually. We've had 2 occurrences of bullish divergence. We had this double bottom. Well, actually, first we had this move down here. This was bullish divergence when we had these 2 lows here, and the RSI created a higher low. And then we had this double bottom pattern. It was a slightly higher low in the price, but really it was like almost perfectly even. And the RSI got much needed strength coming out of that. So this is a confirmed double bottom for me, and that actually signaled me to take a buy on BBIG, and I added to my position on this paper account for all of you who like to track how I think and how I trade. This is a paper account that I grew from 10,000 starting value. It's now trading at around I got 78,500 in cash on this paper account, and The purpose for this account is just to kind of just show people how I trade. This is how I do swing trades. I'm not a super rich man, but I I do decently. Um, and I would rather show a paper account that I can, just show the growth potential by taking very small bets. I take very small bets on market moves. So like BBIG is the one exception. There's like 60,000 shares of BBIG on this one, just because I kind of want to see what happens when eventually the thesis plays out to see what you could do if you had accumulated this many shares at these prices, which is it's a little bit ridiculous. It's a bit in the realm of it's a bit in the realm of gambling, but it's still, it's for fun, right? This is for fun. So BBIG created this double bottom here, and we're seeing a lot more strength coming out of this. This dynamite candle here with this really long wick gave me a great entry opportunity to average down the position. Originally, this was averaged down from around 80 cents or so, and I got it all the way back down to a cost average of 68 cents. So that was pretty good. I put in a bid after this daily candle. We pushed big time, and now I've been watching BBIG put in all these higher lows here. Let me go back and clean some of this up. The double bottom is confirmed, so I'm going to go ahead and remove most of these other lines here, and we're just going to focus in on our latest support and resistance. So we have resistance here that we have seen in this zone based on the top of this wick and the pre-market action from today. And we have support that is sitting, I'd say right here about at the 1 hour 200 period moving average. We have a bullish cross on the 50 and the 200 EMA for the hourly candles. On the daily chart, we're still pretty far away from the 200, which is way, way up here. What we're looking for is to see the 200 continue moving to the downside as BBIG kind of works its way up towards the $1 level. I'm expecting a very slow grind back up to $1 as BBIG's situation improves. I'm really hoping that the new CEO position will, because I don't think that Rod Vanderbilt is going to remain in CEO position, but we need to see we do need to see a change in direction and leadership, and we definitely need to see those earnings statements come out. Those 10Qs are absolutely critical. Alex, thank you so much for the $5, dude. I really appreciate that. I'll make sure to pass that on to our data providers so that we can get the Discord access to more information, more data. Let's go ahead and pull up GREE. This is a ticker that reverse merged with a company called SPRT. That's support.com Incorporated. And those of you who remember from way, way, way back last year, I called out SPRT before it became GREE. And we had gotten an entry. I believe it was in July. A lot of friends of mine when I was with Matt Cora's Moon Gang. We got in when this is massively changed now in terms of its pricing because of the reverse merger and change of valuation. But at the time, support.com was trading at around $6 to $7 back here. This is where we got our first entry, and then it started to run and then retrace, and we got more and more and more as it kept going. And a gamma ramp had built up on it that was greater than the entire value of the company. Or what I should say is there were more options, more call options on the chain than there were tradable shares of the company. And I took notice of this, and when SPRT squeezed, it was crazy. It gapped up it started this run from $6, And over the course of the month from July till the end of August, and I think to like the 1st of September, it was like the 27th of August, it topped out at $58. So it ran by more than, what would that have to be? It was almost like 800 or 900% run on the stock, and it was wild. By far the best call that I had ever made. The conditions for it weren't even. I didn't even notice it at first. It was actually pointed out to by me on a Reddit thread. Um, but sadly, the story for this stock is very very different than what it was back then. After the reverse merger, it crashed, and the equity that was taken by Greenidge Generation Holdings, they took the money and ran, and then they started diluting immediately. So this company got crushed. Um, and valuations are basically down to nothing now. Um, and I'm really sorry to say that I don't really have very much faith that this company will ever really come back. The situation right now, at least for the short term, based on what I can see here, is there does seem to be a little bit of pop in volume that's occurring here, but compared to its monthly, it's not very much. They have a 10 million share float, and they're traded at just under 40 cents. What I can do in order to try to uh, get some insight into what this is doing, or to see if like maybe there is some potential here, is I can do the same thing that I did on SPRT, and I can check for a gamma ramp on the stock. There are no options here. That doesn't seem right. No, there should be options here. Maybe I'm running into a bug from ScourgeBot. Here we go. So I can't exactly show you a gamma ramp, but I can show you the live call open interest on GRE. And this data for GRE shows that between now and June of 2024, at the $2.50 strike, there is approximately 5% of its stock on the options chain. This basically doesn't have a gamma ramp. It's more like a gamma cliff. You would have to climb the entire cliff very slowly in order to get up to these prices, and then you might get a little bit of pop from volatility. It's not really going anywhere, unfortunately. The situation with Greenidge Generation Holdings is not the same as what support.com was. So for those asking about GREE because they're still stuck in it, there's a class action lawsuit that is being leveraged against Greenidge Generation Holdings to hold the executive staff accountable for their actions that resulted in the massive devaluation of the company. This is something that I would encourage you to pursue. I'm actually signed up for that class action lawsuit as an investor who also lost a tremendous amount of money as a result of holding a portion of my winnings from SPRT. And because of this massive blunder by the executive staff in a money grab to get as much cash out of the market move as possible, it absolutely decimated shareholders. And they should be held accountable for that. So in my opinion, that's your best way to go get your money back, is to be a part of the lawsuit that is targeting those executives for what they did. Whether or not it actually gets anywhere is very difficult to say. anyway, unfortunately, that's all I have to say about this ticker. So any news on FFIE? So far, no, nothing has really changed with FFIE. So most of us are out of those positions in FFIE after it hit my bailout point, and I did call this out in a couple of videos as well as in the Discord. The bailout point was right here at $48. As soon as it broke this, it was trying to form a double bottom, but it was getting weaker and weaker each time. So after Thursday on December the 15th, I was like, this is probably the time to cut losses. Or at least take gains. Just about everybody should have had gains because I called this out on the 9th of December back here before it started moving. And it almost immediately jumped the very next day. So people that got into their positions got in a full day before this 2-day run. And just about, I would say that most of us were taking profit after the second day. Hell's Trading Floor, we really do encourage taking profit early and often and scaling out of positions during these big runs. As long as you are doing this consistently, you're going to continue to make money in the market. If you get too greedy and you hold everything expecting more, then you're going to lose what you did have. And then by the time you've felt enough pain that you decide to get out, then you turn what could have been like a 200, 400, 500% gain into just a measly 20, 30% gain by comparison. So it's when you see big numbers like that in your portfolio, it's important to take some of that off the table. Take some of it off the table. For right now, FFIE is the volatility does seem to be over. What we're waiting for now is for it to set up a new base of support. There is some support right here. So we're waiting to see, is it going to hold this? If it does, great. Maybe we'll get another position. If not, okay, we'll wait it out and we'll see what it does. This is one of those big pops, and this stock is it's not a company that's in great shape. Okay, so like I tried to be as clear as I possibly could about this. The FFIE is not like it's not like a magic company that's just going to make you a millionaire overnight. It's an EV play where they have a design ready to go, but still needs to go into production. They are very close to going to production. They're expecting it sometime by Q2 of 2023, but we're in a very bad car market right now, and this is a design level. This is a prototype model EV. It's a really cool looking car, and they've got lots of good funding. They have some very good support from angel investors, and they have plenty of cash to keep going for some time, but their share price is getting hit pretty hard. So, and they also have a reverse split available to them. They've already approved it through a shareholder vote to do a reverse split if they need to. It's not supposed to happen anytime soon. They have more than 6 months before they even need to do a reverse split in order to maintain their NASDAQ listing requirements. But it's on the table, and bears are sensing weakness, so they are trying to hit this thing. What we're looking for is like whenever there's these areas of support after shorts have gotten tired out, then they start covering, and then it causes a run, and then some other shorts get scared and like, oh, I need to take my gains, and then they start buying to close their positions, and it just causes this big run that happens in a really short burst, and that's the move that we're trying to capture. So if you want to get in on that, we do look for these opportunities. The thing that called this out to us was our Scourge bot, which only exists in Hell's Trading Floor, where we analyze the market for extreme volatility in short exempt and market maker activity. And we are able to read the market to determine when there is potential for a big move like this. There are signals that appear in the market that let us know when something like this is due to happen. We never really pinpoint it perfectly, but we can get it within a certain time range that makes it highly, highly accurate compared to anything else that you'll find in the market. So other than looking at options flow, we have a unique method for finding these picks, and that's how we get so many of these penny plays that suddenly, 500%. and then we just take profit. 100% in FFIE's case. I don't want to exaggerate, but this was a 100% move, and it was a good play. So Sleepy Joe asks, any hope for GMVD? Just completed a reverse split also. We can take a look at it, but I remember GMVD was not good, and after the actions by the executive, the owner of the company, I really think the dude's just a excuse me, but a greedy bastard. The dude fleeced shareholders bad, and he lied to Hoot Money, which I like Hoot. We don't agree on a lot of things. We have very different trading styles, and he goes for plays a lot more differently than I do. But he's a good guy, and he was genuinely interested in having a conversation with the owner of this company because it was under attack by shorts, and the short interest data, it corroborated that assessment. And the dude lied to Hoot Money and said that he was not going to dilute. And as soon as there was any value in the company from the run, this is exactly when it diluted on him. And they crushed it. They crushed their own stock, and now they've had to reverse split. And I fully hold the guy responsible for that. So in my opinion, the dude's company deserves to go bankrupt because he's a freaking liar. He's a shady asshole. I don't like him. And he lied to Hoot Money to his face on stream, live, on camera. Like he said, I have no plans to dilute anything. We will not dilute. And then he did it a week later. Hey, Melinda, if you want to go back and take a look at my GameStop analysis, it's literally it's the first ticker that we covered today. It's right at the beginning. I've already given my analysis on GameStop. I'll go back to it to go and review for like some of the market analysis, but we're going to keep moving forward and look at some other tickers. I see a request from Omar for Sofi. So Sofi is Sofi Technologies. This is a company that keeps appearing pretty often. It's been getting hammered pretty badly though. I'll take a look at the daily chart. All right, so we got something interesting going on here. We got a descending wedge appearing here. Why does this keep changing? Really bothering me. Okay, so we got this descending wedge forming on this. It's getting really tight, very tight coil. It might be early, but this does look to me like it's forming an inverse head and shoulders. That's a very bullish 3-peak bottoming pattern that appears at the bottom of a market. So inverse head and shoulders, where you have the way an inverse head and shoulders works, and this is for everybody who's new to trading, because we got some newbies in here. That's okay. Typically, when you look at a head and shoulders, you're looking at a stock that's doing this kind of shape, right? You have 3 peaks in the stock and a flat bottom. And what you're expecting is that the stock comes up like this, drops, goes up, drops, goes up and fails to break out, and then comes straight back down. Well, an inverse head and shoulders is the exact same shape in the opposite direction. You come down from a downtrend in the market, you find support and a lower level of support, and then you reattack resistance, and then find new support. And after you've established that lower level of support, we call this the shoulder level, then you go for another attack of this resistance. And this is what we call the neckline. So when you attack the neckline, when you see that breakout, you look for the first candle that closes above the neckline on the time frame you're looking at. So if you're looking at daily candles, you wait till the close on the day. And then once you get that closing candle, then you can go long. You enter into a long position right at that level, and then you ride it for a full measured move that typically is about the length of the from the shoulder, from the neckline to the peak of the head, and this is the move that you capture. So you go long on the market here. You set your take profit here. You set your stop loss at the shoulder, and it's like a pretty low risk to reward ratio in this case. But you know, that's what you look for. So in this case, you have an inverse head and shoulders that's appearing inside of a descending wedge, and that's actually a very bullish pattern. You're looking at a bottoming pattern that's inside of this descending wedge, and a descending wedge itself is very bullish because it's an overall trend reversal pattern. So you see this moving to the top and then to the bottom and hit the top again and hit the bottom again. Now, you might expect this one to either break out the top or come back down and retest the bottom again before breaking out. It's usually the third or the fourth move on a descending wedge that you see that breakout, which is why you want to wait for that breakout or get an entry at the bottom of the wedge. That's your best chance to get a good entry. So if you do end up doing that, if you end up getting an entry near the bottom of that wedge, then just set yourself with a very tight stop loss that keeps your stop loss outside of that wedge, but still close enough that it protects you, and far enough away that if it undercuts the wedge just a little bit, because that does happen, sometimes it goes like this. Yeah, if you have too tight of a stop loss, then you'll get stopped out of the trade right there at the bottom, and then it'll take off without you. So be careful of setting too tight of a stop loss. But always have a stop. Always have a stop for these swing trades and day trades. But I do like the technical setup for this one. You're starting to see some strength here on the volume direction candles. I'd like to see it bounce one more time and establish a very firm bottom right here. That's a very good bottoming pattern. We want to make sure it holds this. And then once you see that bounce, take the entry, and then I would trade it probably to the 200 daily moving average. That's actually a really good setup. The only problem that I'm seeing here is that you have the simple moving average has this is actually a bullish cross. I'm sorry. The red trend line, this is your EMA, and the blue line that's out here, this is my simple 200 daily moving averages. They're both 200 daily moving averages, but the EMA is slightly more reactive. So when you see the EMA crossing above, that usually signals that a trend reversal is coming very soon. Since this is on a daily time frame, you're probably looking for a trend reversal to come within about 2 months from the time that cross happens. So we're right there in that range. I'd say we're right. You're just about at the right time for a good entry. It's up to you. It's up to you what you want to do. If you do take the entry, just make sure that you do give yourself a stop loss, because there's always the potential that with the market right now, this breaks down through the bottom and rejects off of resistance and then heads further down. The market's not very kind right now, so this just is something you have to be aware of. Don't give yourself. Don't trick yourself into believing that these patterns are 100% accurate all the time. They do fail. See a request for Palantir. I'll try to be quicker with these because I see that I'm starting to lose. I'm starting to lose everybody. Hey Neil, congratulations on the 130% on FFIE. That was really, really good play. Nice exit. AC, don't you be talking about my boy Hoot like that. People make mistakes, and when you get lied to by a CEO, it hurts. It wasn't long after Hoot got lied to by the CEO of GMVD that I got lied to by the executive. He was the chairman, the executive chairman. He didn't personally talk to me or anything. I never spoke to the guy, but he bought 666,666 shares of stock right after I did this big hit piece video on his stock, and I was like, I see some really good fundamental value here. There's some like they have a good revenue stream, and I was talking it up like I'm interested in this one. And then he did that. He dropped that buy order, and it was a significant purchase while Excella was trading so low in its price. And then after it started running, I was like, hell yeah, all right. Sounds like he's really interested in saving the company. And it felt like the 66666 was a, tip of the hat to me. So I bought. And then 2 days later, he reverse split the stock a full 6 months early. He reverse split 6 months early and tanked the stock price and found out that he sold his position almost immediately after buying it. But he didn't disclose it until after the reverse split happened, which is illegal. But nothing's going, like, nobody's doing anything about it. And I can't afford a lawyer to come after the asshole. So, like, people get really, really down on the YouTubers and people who are trying to help teach people how to play the market. But this market will play you very quickly and easily. And there are ruthless, corrupt, and dirty, sleazy people in business in this world who really have no business doing business on this planet. There are scum of the earth running a lot of the biggest companies in the world. And if you forget that, then you will get chewed up and spit out by this market very quickly. It will give you a harsh slap in the face and remind you that this market is not here to be your friend. So you have to think very selfishly and very carefully about your moves in this market. Don't get played by emotions. It's dangerous. Emotions are very dangerous in this market. So don't get played. I learned from my mistakes. I made several mistakes in this market. You are way better off just be smart and protect yourself. Always hedge your bets. Don't trust what an executive tells you at face value because he wants your money. That dude wants your motherfucking money. You need to be careful trusting those people. Do not trust suits. Matt Kors actually said this in a tweet today, as a matter of fact. I agree with him 100%. Never trust the suits. And I understand the irony because the symbol of the Hell's Trading Floor brand is literally the devil in a suit, but you guys get what I'm getting at. It's all satire. All right. I'll get off of my soapbox. We'll go ahead and move on forward. We'll cover Palantir. Let me finish catching up with chat again. It's nice to see the chat so active. Like I can't even keep up with you guys. I'm gonna have to scroll forward and just be really quick. Pablo J asks, "What are your feelings on AMC? I see it as a long-term needs market term before anything happens. Do I see any original squeeze theories that are still valid? Do believe it will end up higher than current long-term." So AMC is still very heavily shorted. It's obviously being beaten down. I don't know that the original short squeeze thesis is still intact because the shorts got absolutely blitzed in May and June of 2021 for sure. The short interest was the highest that it had ever been, and it really there are more short shares in it now, but I feel that most of those shorts shuffled their positions around. So will it get another short squeeze? I think it's possible because there is still more than 20% of the stock sold short, and most of those shorts got into their positions relatively recently now. But the original short squeeze thesis of naked shorting is really up in the air. We don't have any way to know, so it's so difficult to make any definitive statements about it. JP asks, "Is there a bottom for AMC?" Sure, there is. There will eventually be a bottom for AMC. It's not going to go down forever. The stock won't. I don't think that this company is going to go bankrupt. For AMC to continue going down and down and down and down, it would have to go bankrupt. I don't think that's going to happen. for just even for the one reason that AMC is the largest theater chain in the Americas, and it also happens to be one of the highest grossing theater chains. So if any theater is going to go bust, it's probably going to end up being like Cinemark or the private chain theaters. Um, AMC is doing fine by comparison to the others. So you know, and also for the other reason that theaters, specifically movie theaters, since the 20s has been one of the highest performing industries during times of economic depression or recession. Every recession we've had, including the Great Depression of the 20s, was actually one of the best performing times in the market for entertainment stocks. Specifically, AMC had just started as a company back in the 20s. I don't think that it was traded in the stock market because like that was a long time ago. But AMC got started in like I think it was like in the 1890s or like the 1900s. I'm not sure which. They've been open for more than 100 years. I can tell you that. And they really took off after the Great Depression because everybody wanted to get some entertainment somewhere, and movie theaters were surprisingly cheap. You could bring your food into the theater, just pay for a ticket, and enjoy a movie. Let's see. Is Mullen going to get diluted again and consolidated? I'll have to do some digging on that. I'll look into the dilution tracker and see if I can find some more info on that. And I think I'm just not going to be able to keep up with chat. Y'all are moving so fast. But keep it up. I love seeing you guys talking back and forth. I do appreciate it. I'm just going to keep on rolling. Omar, thank you so much for the $3, dude. I really appreciate that. All right, so let's go look at Palantir because somebody asked me for that a long time ago, and they've been very patient. So Palantir, this is a Kathy Wood stock. It looks rough. It looks really rough. So you have this descending triangle that was playing out, and it's finally broken down. Now the only thing you have left standing between it and a new downtrend, and this is the bottom of its chart, so we don't know how much lower it can go. Palantir also doesn't have a profitable product. I know that for a fact because they're in AI technology. I remember back in 2021, they weren't expecting to have viable product for the next 2 years that they would be able to like make good revenue. They seem to be holding themselves up okay, but their revenue stream is still pretty thin. That's a very thin margin. I'm not liking the look of it. But they broke this support, and now they're cutting right through this bottom here. So if they don't bounce here, then this can be really bad for Palantir. If anything, I would probably have gone short on it if it was up to me. But yeah, this whole thing is like a descending. This whole thing is a descending triangle. This is not a descending wedge. Yeah, Palantir is getting hammered. I'm kind of neutral, leaning bearish on this one. They've got such a huge float, and they're in massive decline. They're barely profitable. Their net income, yeah, most of their income is going to debt and shareholder equities. So they're still losing money, which is not good for them. So Palantir is not in great shape. Joe says, I bought some AMC today. Felt like this was the floor. I hope so. I'm pretty hopeful. The AMC is definitely struggling. I really want to see a bounce here, but I don't see it just yet. I don't have any confirmation yet. Thank you again, Omar. Thank you for everybody who donates to the YouTube streams and stuff. Um, I actually don't. I've been asked this question a lot. Is like, how much money are you making off of this? I'm actually making $0. I'm making exactly $0. Um, all of the money that comes to Hell's Trading Floor through either YouTube or the Discord, we're sending it straight back out into our data providers to get more data and developing more tools to help make Hell's Trading Floor a more powerful entity where we can find more stock plays like Cosm. Like a lot of the members of Hell's Trading Floor were calling out Cosm to me, and unfortunately, I wasn't available to do an analysis on it when it was going on, and I missed the whole thing. I'm actually kind of sad because I was like, I just wasn't. It was like one of those days where I was just getting slammed at work and I couldn't get away, and I missed an awesome play. But Hell's Trading Floor caught it because they had the data. Everybody else is looking at the data. So it's not just me that's making all this magic happen. Everybody else that's been playing this market with us, they're catching all these bottoms and all these runners. Like Cosmo was one of the recent ones, but FFIE, that was because of our data provider. I didn't find that because like I'm a magical, a magical clairvoyant that can see what's going on in the market before it happens. I looked at the data. I looked at the data that we have here in Hell's Trading Floor, and I did the analysis in front of everybody, and I called it out a whole 24 hours early. And we have plays like that all the time. Beam was another one that was called out on Hell's Trading Floor because we had access to data. Trying to think of what else there was. Carvana's been showing up quite a bit, but it's getting pounded right now, and it is a real risk of bankruptcy. If Carvana survives bankruptcy, yes, it'll be a magnificent squeeze. But unless it can get past this, it's going to have a hard time. Let me cover TSM and the semis really quickly because I needed to look at the semiconductors. So TSM, this is the Taiwan Semiconductor Manufacturing Company based out of Taiwan. This is like the number one producer for machines and semiconductor manufacturing for the entire world. Like 80% of the world's supply of semiconductors. I'm probably slightly off on that figure. Let me actually go and look it up really quickly. I need to see how much of a share. Semiconductor market share. Let's go see what Statista says. Statista has some. All right, so let's get Statista up here. All right, so as of this year, TSMC produces 53.6% of. Oh wait, these are their. Oh, this is their leading foundry share. So they have 53.6% of the total foundries in the world and revenue share. So they make half of the revenue that is produced in the entire industry for semiconductors. So TSM is this is a big deal. They are at massive risk for getting hit by China, which is not good. And I want in on that play. So I kind of want to go short on them, and I should have been doing it yesterday, but I was too slow. So I'm going to go short on these guys. Let's go make a limit order. I'm going to go in for $500 risk. Now, I have a very specific setup for this. I'm using this tool specifically. This is called a short tool or a short measuring tool. What I'm doing here is I'm creating a risk to reward ratio. So if you are not familiar with the concept, then listen up. This is something to, grab a pen and paper and learn something about swing trading and day trading. This is a really important thing to know how to do. This all has to do with risk management and having a clear target for price price targets and stuff. So TSM, I'm looking at this analysis. I see some huge signs of weakness. One, there's all these gaps right here. Okay, look at this volume shelf. There's nothing here. This is all air. Okay, because it was barely traded here during these days when it was moving up. Now, the other thing I see here is we've got a diamond top. This diamond top is an extremely bearish pattern, and we broke it back here on the 14th of December. So honestly, I should have taken the position back here. That would have been great, but I did not see this coming. And yeah, it was a really good setup. So now I'm getting a little bit of a late entry, but it's okay because I have an opportunity here that shows me that there's a very big risk to reward ratio. Risk to reward ratio is how much gain you stand to receive versus what you're willing to risk. So if your risk to reward ratio is, in my case, we're just going to round this up to whole numbers. So we're going to say 4-to-1. My reward is 4. My risk is 1. So for every dollar that I'm risking, I stand to gain $4. And the reason for that is because I have a stop loss. Now, if you're trading on margin, margin allows you to trade with more capital than you actually hold in your account because you can use stop losses. It is very important to use stop losses. Always use stop losses. Unless you're doing a buy hold investment for the next 10 years, you should always have a stop loss. In this case, I am shorting something, so I am selling shares that I'm borrowing from somebody else. And my goal is that I want to see the stock trade down to around $62.65 because that's where support is. That's where I see support down here. So now what I'm doing is I have my stop loss up here. So if I'm wrong and the stock suddenly bounces and just goes crazy, I'll get stopped out right here. And I'll lose my $500 that I placed my bet with. Okay. I'll lose $500. But I won't get absolutely liquidated because suddenly the stock just gaps up here someday and I lose my whole account. Okay. This is part of risk management. It's very important. So when you're doing this, have clear limits that you are set for. And the most important thing is when you see these opportunities, you take the opportunity, you place your trade, you enter without hesitation, and then you walk the hell away and you don't look at it until it's done. This is the principle of swing trading that will save your life from making some terrible mistakes. Because once you have a thesis, if there is a position that is worth getting into, you should not be getting out of it until your thesis proves true or false. And the true is when you hit your take profit. False is when you hit your stop loss. And that's all you need to do. That doesn't mean that you can't exit early if there's a circumstance like, oh, the Fed's pivoting. It's obvious that my thesis no longer is true. You know, something like that happens. Or, oh, China just created a new trade agreement with Taiwan and they're going to be best friends now. No war is going to happen. And TSM's going to create like all the new manufacturing supply of semiconductors, blah, blah, blah. You know, something like that happens. Then it's like, okay, well, obviously I'm going to be wrong. So I'm just going to exit my trade. But as long as your thesis remains, you know, plausible and you feel that it is true, then you should not even look at the trade again. So I'm going to hold this trade. I'm probably going to be holding it for the next 3 months, and I'm just not going to touch it. And with my $500 risk, because my risk to reward is 4-to-1, for my $500 that I'm risking, I stand to gain 2,000. That is the purpose of risk to reward ratios and risk management. Making sure that you keep your losses small and you make your gains worth chasing. It's a very important lesson for everybody to learn. Hey, Joe. Joe says, I just averaged down on GMVD. I think I'll give it the standard 30 days and sell for the write-off next year. Oh, homie. That's probably not the way to go. Let's see. Let's see. What else do we have to look at? ASML? Is that ASML makes all the best machines. Is that like a semiconductor manufacturing producer? I'm sorry. If you're hearing the noises, that's actually my work chat, and I'm on vacation, so they can all piss off. Bye bye. I'm on vacation. You can't find me now. You can't get me. Ah, I'm so happy to be free. So happy to be free. I haven't taken a vacation in over a year. Not a real vacation. Staycations are the best. Okay. Big Bird, Biora has well, I'm not gonna say that on stream, but I'm sorry. I'm sorry for what happened with Biora. I'm in the same boat. Like my losses are so huge right now. I'm just like, man, this sucks. If I had known, like obviously, if I had known that Biora was going to get smashed this far down, I never imagined that their stock was going to get pummeled this badly because they had partnerships that we knew were in the works and they were working with one of the most powerful hedge funds in healthcare. I just didn't see a case for I didn't imagine, I was like, okay, sure, it can like get down to $1 maybe. But then the whole market started turning on it and just started beating the hell out of the stock. And it's like they're trying to just anytime there's good innovation in the market, it feels like these guys just like it's big players in the market. They see something that's innovative and it's like, oh, that looks like competition. Better murder it. Just grab it by the head and just shove it under the surface of the water and hold it there until they stop making bubbles. That's what I feel like hedge funds do when they see big opportunities for a market disruptor and growth stocks. It's what it feels like. Because rather than seeing humanity progress in any meaningful way and creating new, cheaper alternatives to our existing pharmaceuticals, no, we need to make sure that we're making infinitely more money for ourselves by destroying innovation and progress wherever it rears its head. I'm really sick of seeing that happening. It's literally how it feels at this point. Because between Senseonics, which was creating a revolutionary product for glucose glucose meters, and Biora, I just like the products and the ideas that they have are amazing. Why kill those ideas? Hey, Omar, thank you very much. Omar says that Beam was a fire play in Hell's trading floor. I appreciate that. Big thanks goes out to Pro XGT. Our he's our resident car sales expert in Hell's trading floor. I hope he's able to stop by at some point today. But he called out Beam because he saw some amazing potential from their EV charging stations, and it was something that was pretty close to his industry because there's a big focus on EV and stuff. There's a big focus on EV and stuff with the car industry now. So Beam finally got a bit of that retracement that I was looking for. I'm kind of selfishly hoping that it comes back down, just because I'm not bearish on this in the slightest, but I really want those shares at a cheaper price than what just happened. I was looking at it when it was like at $17, and I'm like, I think it could come back down and retest the simple 200 moving average, and it just didn't happen. It started ripping, and I was like, oh god, I missed the boat. So I'm kind of hoping for it to come back down so that I can grab a small position down here and just get a little bit more because I want to add this to my portfolio for a long-term investment. Beam Global looks like it has excellent potential as a EV charging company. Their product is awesome. Like it's awesome. The financials are really good too. They have almost no debt. They got a great revenue stream already, and they have partnerships with local and state governments across the country to install their charging stations everywhere. They've got partnerships. They've got over like I think it was 200 partnerships on their website. You could go to Beam Global's website. They have all their partners listed on their website, and there's so many of them with local governments, municipalities, and large cities. Like they have a lot going for them, and they've only like they don't even have the production capacity to keep up. That's the only problem they have right now. Their biggest problem is that they can't make the stuff fast enough to sell it. And that's awesome. And they have this giant surplus of semiconductor materials ready to go to manufacture it. Their only problem is that they don't have the production capacity to make it fast enough to sell it fast enough to who wants it. And that's an amazing problem to have as a business. It's like we have so many customers that are in demand that are demanding our product that we can't make it fast enough. That's awesome. That's excellent, excellent news. So I'm super excited for this one. And I'm really, really want a bigger position, but I'm trying to get it at a cheaper price. That's what I'm trying to do. Okay. Chris McGinnis says AMC interesting at $5. See, that's what I was thinking. Like, I'm waiting for this bounce to happen. I think that this candle is just going to knife and then come back up at the end of the day. We're getting close to the close of the day though, so I don't know what's going to happen for sure. We might end up it might end up looking more like a weekly double bottom pattern, but I don't know. AMC's just been targeted so heavily by shorts in the market, and I find it frustrating because even like the whole ape movement aside, the obvious targeting of specific stocks in order to drive companies out of business, which have good business models, but trying to starve them out and just targeting them specifically to drive them out of business so that they don't compete with your businesses. So dirty and underhanded. Like, I would rather be seeing companies surviving, thriving, and getting better and advancing. Why are we entering into this predatory mindset and trying to smother things, smothering good businesses that have been historically really good and beneficial? And as soon as they run into trouble, it's like that's the one. Kill it. And that's what Wall Street does. It just infuriates me so much. I appreciate the sentiment, Big Bird. Big Bird says, no doubt. Still think you and this channel is brilliant. Been watching for a while. Thank you, dude. I appreciate it. I hope you'll come back and spend some more time with us in our streams. Things got really quiet after the market took a turn. Hopefully everybody is doing okay, but I know that Hell's Trading Floor has been learning how to play this market on both sides of it. It's difficult. Like, bear markets are really tough to survive in and thrive in, but we're doing it all the time. We've somehow been managing to do it. It's been quite a journey between what I've learned and seeing everybody else learning from the progress that we've made and all the data that we've been able to coalesce into this monster this monstrous think tank here in Hell's Trading Floor. I'll go ahead and take the time to shout out everybody in the trading floor who may be listening, but Savvy Trading, General Disarray, Rizzler, Better Than Gold, Bobski, Captain, The Robot Insano, Casual Fool, Chef Pew Pew, Mr. Boule, D-Ray, Dubiwa, Dox the Fox, Echo, Grim Reaper, J Brown, J Ruff, Karak, Lush Rimbaugh, Mr. Head, Numb, The Other Barry, The Real Tony Smith, Tempestuous Persephone, and tipped flickering. Shout out to all you guys hanging out on the trading floor, trying to help keep everybody on the right side of the market. Hey, Pablo, thanks for the £5, homie. Thank you so much. Pablo says, thanks for doing what you do. Great education and your attention to chat and community is awesome. Also love the Discord. Great community. Thanks, Pablo. I'm trying to do a better job of keeping an eye on chat and being able to keep up with you guys. It's difficult. Like y'all like to have me running around looking at all kinds of tickers, but it's fun though. Keeps me on my toes. Let's go take a look at the SPY and see where we're currently at. Trade's still going very well. I took a big profit on this. If you guys are coming in late after what happened last week, we actually entered into a position right here, and we had a stop way up here. We captured this entire move down here for a $3,000. I think it was like 3,200 something. Let me go back into my paper trading history. Let me go look. 3,700. So this was the profit that we took on this move right here, and we called this after the CPI data print, and then we said, "Yep, okay, now the Fed's going to go hawkish and smash the market. They're going to take this opportunity to remind everybody that we're still in a recession." And sure enough, that's what Jay Powell did, and market tanked. So we took giant profit all the way down to here from this move up here. We grabbed our profit, waited for a bounce. We actually got a midday bounce and re-entered into a short position, and then it's just continued tanking ever since. So after that $3,700 profit, we actually switched for a long position on the bounce. I wonder if I could actually go back on the 1 hour and spot my trades. Let me go look at the trades. I can show you exactly what I did. Let's see, I think I can turn on my execution rows here somewhere. There we go. Executions. So these are the areas that we went short right here. Average down here. Actually took a little bit of profit and then shorted it again, shorted some more. I took profit on my short position right here on this candle and then went long on the market. And then we turned around and went short up here. So this was a really small profit, but it gave me enough to enter into a pretty nice average down on my position. And you know what? Now that the market is breaking support, I think what I would like to do is go ahead and average up on my position again. So what I'm going to do is I'm going to set up a short position right here. I'm going to change this to my stop loss. And I'm going to move this all the way down here to where my take profit already is sitting at. I'm going to add another $500 here. Need to cancel this old order because that's no longer going to apply. All right. So I'm going to go ahead and move this over to my sell limit right. Okay, I think I've got that all fixed now. So currently I'm risking $627 in the market based on where I adjusted my stop loss to. My position is currently in profit for $535. I'm looking to average up on my position, add another $500 of risk to my current position, And that is going to change my current take profit, which is looking for a $2,800 profit, to a that'll actually add another $2,800 to it. So overall, my take profit is going to be approximately $6,400 take profit. Doing a little bit of head math, I'm sure I screwed it up, but we'll go ahead and move forward. So I like that position. Let's go take a look at the SOX semiconductors. Oh man, this tanked so fast. I never got a position. God, I knew I called this. I called this perfectly. I never got my trade in. I got a trade on NVIDIA. My NVIDIA position is up big time. Like, look at how well NVIDIA is doing. I'm up $980. I'm up almost $1,000 on this. That was a lovely trade. NVIDIA is about to get messed the hell up. Okay, I'm gonna adjust my. Let's see. Can I adjust my stop loss? I can. Do I want to though? I'm gonna adjust my stop loss to here and kind of drop a little bit of the risk. But this is a channel. This is a rising channel after a big impulse move, and Nvidia is now starting to break on the day. So I'm expecting Nvidia to tank tomorrow. I'll leave my stop loss right here just in case. I will be willing to risk a loss, but I don't want to risk getting stopped out of my position, even if it's in profit, just because of a gap up tomorrow. I don't think that Nvidia is going to gap up a full $9 or $10 actually. It would have to gap up $10 in order for it to hit my stop. Yeah, Qualcomm is slipping as well. Qualcomm is getting smashed. This one was a huge bear structure. This big move right here with this triple top formation right here, these three tops right there, that told you this thing was done. I missed the move though. I wish I had been paying more attention last week. There were so many good short opportunities in the market last week. Okay. So Qualcomm is getting ready to break a previous zone of support that was right where it bounced off of this bear flag that formed. I'm going to go ahead and delete that bear flag now. But Qualcomm has some weak support that it's at right now, and its strongest support is down here at around $109. Qualcomm from that point, I think, can fall down to around $96, $95. Overall, if you're just not sure what to go after, the SMH, that's the VanEck semiconductors, I did get a position in this. I wanted to go on SOX SOX short. The SOX S ticker is just a leverage ticker that tracks and inverses the SOX semiconductor ETF. That one would have been a great play. But anyway, I got into SMH for a short position. I called this out and let everybody know what I was thinking last week, actually. But this position I was already in last week, and we're in really great shape right now. Let's see, my current risk to reward ratio is at, let's see, it's almost a 5-to-1. It's 4.88 risk to reward ratio, so it's a good setup. And I'm already pretty far in profit. Once I get to the point where it's trading down like in this range, I might take about half of this. I might close half of the position and then just let it run. And then it's all house money at that point. The dividend is about to hit on this, though. So the fact that this is tanking right now and the dividend record date, let's see, is this the record date or the ex dividend date? I think this is the X date. Yeah. So this is the X dividend date. So in a couple of days, there's going to be a huge wave of sales from people that have received their dividend. Those guys that want to sell because they no longer want to hold it. They were only holding their stock for the purpose of receiving their dividend in this. Those guys are going to take the opportunity to get rid of it. And I think that we could see this thing fill this gap here. There's a nice gap right here on the SMH ETF. You see that right between trading view. You're betraying me. This gap that I'm talking about right here. There's a gap between. That's a 4.5% gap between 196.50 and 205 on the SMH. So when this thing breaks this support, and I think it will break this week, this thing's just gonna die. So it's still up there enough that you can capture the move to this gap. If you're looking for a stop loss area at this point, it's a little bit of a late entry, but if I were in this position where I got here late and I wanted to enter right now, I would probably put my stop loss right here, just above the bottom of the bodies of these candles right here. So if I have my stop loss up right here and I want to capture this move to the downside, I can get a 2-to-1 risk to reward ratio off of just this move. Or you can do puts. Puts work too. You can get some puts here at the money or slightly out of the money, and then just play it. A strike of 200 for next month is probably the ideal purchase. It's expensive though. Options on this are particularly expensive. So if you're trading with a small cash account or a small margin account, then probably the better way to go would be with SOX S. This is a inverse ETF that tracks the semiconductors market. You can buy calls in this, and this will, when the SOX market goes down, this does the opposite of SOX ticker. This can go ballistic, and it's leverage too. It's 3 times leverage right here. Hopefully you guys are getting something out of the education. Give me a shout out if you guys are looking for something different or if you're enjoying what I'm giving you. Trying to focus mainly on what the broader market is doing, because a lot of us have focused on meme tickers for a long time. We need to be focusing on what makes money consistently. If you're looking to stay in this market for the long term, whether or not you've been involved in the whole meme stock thing, if you want to keep doing this, you need to learn how to make money in the market based on macroeconomic events and understanding what the broader market is doing, understand what the Fed's doing, and understanding basic technical analysis. Like the semiconductors market is a massive opportunity right now. The semiconductors market is at a clear top. It's at a clear top. Look at this thing. It had a triple top and a massive rejection here. This is perfect for a short. You can take this all the way back down to the bottom of its chart from October. As a matter of fact, just to prove the point, I'm going to go ahead and enter this position right now, and I'm gonna take this trade. You know what? I'm so confident. I'm going to set my stop right here. I'm going to go for a 5-to-1 risk to reward ratio because I'm really confident that I'm right. Why can't I trade this? All right, fine. We're gonna do SOX S. I'm gonna trade SOX S. And this time, because this is an inverse ETF, I'm gonna go long on this. I'm gonna trade this to $63, and I'm gonna set my stop down here below the 9. This is the 9 EMA, this white line right here, this white trend line. This is the 9 EMA. I'm gonna trade this to, yeah, I'm just gonna go for this. Take a limit on that. 500. Slight adjustment. Okay. So I have a $514 risk. If I'm right on this trade, then within a couple of months, maybe, I should see a take profit of $2,411. That's my trade. Now I'm going to pretend it doesn't exist and I'm going to walk away. And now I can move on to everything else that you guys are looking at. So let's see. Yeah, literally my only big red trade right now is BBIG because it's getting smashed right now at the end of the day. Getting down to the very end of the market, I'll take some time to analyze a few other things. Today we'll cover a few more, penny stocks and small tickers. But I'm gonna try to move away from covering only penny stocks because there's a big focus. There's a big focus from everybody that comes to this channel that's looking for me to like give them some hope for these beat down penny stocks that have reverse split 2 and 3 times. And my heart can't take it, guys, because I'm watching people losing money on these plays, and I want to encourage everybody to be able to spot independently good plays that will make them consistent gains. So that's going to be the focus going forward. I'll cover a few of these, but we're not going to do these exclusively. Okay. It's nothing personal, and it's not like I don't think that penny stocks can be profitable sometimes, but like this is difficult. All right. So CEI, Camber Energy. What's going on with this? I'll explain exactly what happened. Cosmos ran. CEI saw it happen. They announced they were going to move up their reverse split, and then everybody got like crazy. This is going to tank, okay? I'm not financial advice, okay? Not financial advice. But CEI has not had a fundamental change that justifies this move. This is euphoria from a bunch of retail investors that think, oh, reverse split equals squeeze. And it's not true. It's not how it works. Anybody that sees Cosmo and thinks that CEI is going to do the same thing, it is not true. It doesn't mean it's impossible, but it is not, one does not equal the other, okay? What happened with Cosmo was a very specific event that was caused by very specific conditions. So it's very important to recognize and understand that I am going to do research on Cosmo and I am going to figure out why it squeezed, but I am not going to trade CEI. I am running a test. CEI is one of the stocks I am watching. I am not trading it. I am staying out of it. I'm going to look very closely at what is happening to it, and I'm going to analyze its pre-market activity when eventually this reverse split occurs. This is a 1 to 50 reverse split. So I'll tell you how this is going to work. Right now, CEI is trading at $11. I'm sorry, 11 cents. 11 cents, excuse me. CEI is trading at 11 cents. If it closes the day at this price, okay, if it closes the day on Tuesday, December the 20th, at 11 cents, then the stock's float will be divided by 50 and its share price will be multiplied by 50. Okay, let's just work with round whole numbers. Let's just say it's 10 cents. Okay, let's just work with 10 cents. Keep the math simple. Say CEI closes Tuesday at 10 cents. It will open on Wednesday at 5. Let's see. I'm feeling stupid today. I'm going to use a calculator because I don't trust my head math anymore. All right. So 10 cents, multiply that by 50. Okay, it is $5. All right. I'm not stupid. All right. So CEI will change its ticker share price to $5. Okay. That is where it should open up on Wednesday. There is a trade-off. All of your shares will be divided by 50. So if you're holding 100 shares, excuse me, sorry. If you, sorry. I need to, damn, sorry, I thought I had something caught in my throat. Okay. All right, I'm still alive. So CEI, if you're holding 100 shares, your shares will be divided by 50. So for every 100 shares you have, your shares are going to be divided by 50. 100 divided by 50 equals 2 shares. So every 100 shares you hold, you're going to be left with 2. If you hold any number that is not divisible by 50, then you will get cash in lieu of shares. So you will not be getting those extra shares. You're not going to get fractionals, okay? Your shares must be divisible by 50. So 50, 100, 150, 1,000, 1,500. You'll get a even number of shares. But just to illustrate how devastating that is, 1,500 shares divided by 50 is only 30 shares. You're going to get 30 shares worth $5 each. That takes you, that's a $150 value any way you slice it. But CEI is probably not going to stay at those levels. The likely outcome of a reverse split is you get a whole bunch of bears that see the reverse split and they enter into short positions and start beating the hell out of it, especially now that it's been propped up and pushed up here by retail investors that got really excited about what's happening to Cosmo. And they think it's going to happen to CEI again. It's not universally true, okay? So you have to be really, 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 really careful and really sure that you're willing to risk that money. Don't risk money you're not willing to lose. This is not a sure thing, okay? And it's really upsetting to me watching a bunch of people just like pushing out this story like reverse split equals squeeze. It's not true. Please don't do that. Please don't throw all your money into this. If I hear anybody full ported into CEI, I will slap the living shit out of them. Don't make me have to go and come through the monitor and just smack the hell out of you. Rule number 1, don't full port. Rule number 2, reverse splits are not good. It's a necessity. CEI is going to get delisted if they don't do the reverse split. That's the consequence of trading below $1. Can't stay listed on the NASDAQ for less than $1. Omar is asking, True Demon, if you could go back to the day you started trading, what is 2 things you would definitely change to become a profitable trader? Number 1, I would have set a take profit. That's what I would have done. If I was going to be a profitable trader, I would have set a take profit, and the second thing I would have done is set a stop loss. Those are the 2 biggest things that I would have changed that would have made me into a profitable trader. I made a ridiculous sum of money on AMC when it squeezed to $70. All right, because I was stupid. I bet an insane amount of cash on these deep out of the money calls because it was running. I bought a bunch of really dumb calls that were expiring like a couple or 3 weeks from then. And it just kept going because everyone else was doing the same thing. Gamma is a real thing, by the way. Anybody that tells me Gamma's not real, they've never seen it. But what I did was stupid. And the thing is that once it hit that level, I never had a take profit in mind. I didn't know when I was going to get out. And I saw all those zeros on the screen like, oh my God, I just became a millionaire. And I just didn't know what to do. And I froze. And then I watched the share price start to get beat down after Adam Aaron announced the dilution. And that was dumb of me. I should have sold right then and there. Should have liquidated everything, and I should have gone short. That would have been the intelligent thing to do. That's what every other intelligent investor would have done in that circumstance. When you see that kind of money on the screen, you take that profit, and not only that, you withdraw it from your account immediately. Don't play with that. Don't play with all that money. If you ever make it big, okay, this is my advice to everybody. And this is not financial advice. This is common sense, okay? If you ever hit it big where you bought you just on a whim, you're like, I'll buy 100 calls of this. They're only $1 each. Why not? I got $100 to spend. F it. I buy $100 and then next week it goes nuts and you see like $100,000 or $500,000 sitting in your portfolio. If that ever happens to you, take the damn money. Take the damn money, take the profit, and get that money out of your brokerage account right away. Do not hold that. Do not trade with that because it messes with your mentality. You will make a mistake like I did. You will lose it all, and you will spend the next year hating yourself for making that decision. If there is any piece of advice that I could encourage anyone is set a take profit, set a stop loss, and when you hit it big, get the money out of your account right away. Don't play with it. When you hit life-changing money, never play with it. Go put that money somewhere else. Go buy gold. Go put it in a Roth IRA. Throw it into an investment fund. Buy bonds. Do something that is safe. But whatever you do, don't play with it. Never, ever play with millions of dollars that you've never had in your life because you will gamble it away like an idiot. And I'm speaking to you from experience because I did exactly that. Hey, J Pong. All right, so I'm sorry I missed the closing bell because of my tirade there. We'll go ahead and recap the market. So market closed at 3.80 2 cents. All right. So that's a breakdown. SPY's filled its gap here. That is precisely what I expected to see. So now it's held down right on this level of support. That's a pretty important level of support right there. Now we have to see how the SPY reacts tomorrow. Let me catch up with the chat here. All right. So let's see. I hit SOXS. All right, cool. Happy to hear it, Neil. Good show, dude. All right, Cosm getting closer to that $5-6 zone. Just touched 730 a while ago. Check out Grom for a possible future play. I'll write it down and I'll check it out another time. I'll add that one to my list of tickers to check out. Okay, I got that one. ASTS. I think that I covered that one at some point. I'll take a look at that one later. Thanks, Jay. Just catching up with chat, guys. Sorry for the quiet. Do I think that Amazon could pay dividends one day? I mean, they're not required to, but I feel like they should at some point. Amazon's got a lot of equity shareholders. They don't want to be the kind of stock that people just trade and flick around all day long. It creates I feel like dividends create a little bit of stability in stocks because it encourages the long-term holders to gravitate towards it, not just because of the increase in its value over time, but because of consistent payouts. It doesn't mean that they will do it, but the companies, I think that the company might benefit from it at some point. So I could see them doing it at some point in the future. Yeah. As long as you don't full port, you will never be slapped. If you like majority port, though, I might still come over there and slap you. I don't know. Just want to look at CHPT. That's charge point, isn't it? All right, I'll take a look at that one really quickly. CHPT, charge point holdings. I've seen this one before. All right, this one's getting... Okay, interesting. I did look at this one once upon a time. It was forming this giant descending wedge, and now it looks like it's getting ready to test support again. It could be a bottoming formation, but you need to be careful. Wait for the bounce in it, because the bounce may come today. It may come down at $7.74, or it may not come until next year. This one's a big speculative play. This is a growth sector stock. Did I get a... Oh, my lift alert went off. The lift has been getting smacked. Okay, moving on. Charge point is... They got a pretty decent sized float. They're a $3.3 billion market cap, so they're a mid cap stock. Definitely a growth play, though. I would give it time because the market is just not in favor for these right now. Beam is an exception because they're right at the cusp of executing on some major contracts. I don't know the story with ChargePoint though, so ChargePoint could be a good one too. I'll tell you what, I will read into it and see what the story is. But I'm probably not going to do a video on it. I'll probably end up covering it at some point in the trading floor, and I'll cover it with everybody else. But you guys, if you guys want to get in on that, if you want to talk to me about it and chat, I'm available. Like we're all hanging out in Hell's trading floor all the time, looking at this stuff. So if you guys want to get questions answered and look into these other tickers, growth sector stocks, or anything, if you want to learn how to play the market from absolute scratch, knowing nothing, this is a great place to come. So if you want to join Hell's Trading Floor, you can find us at our website at www.hellstradingfloor.com. Sign up on the links. There's a trial for the lowest tier membership. That's the Denizen tier. There's a 7-day trial where you can just hang out in the trading floor and talk to us, and you'll just see how we work. And if you guys want to sign up for more, the higher tier subscriptions give you access to more and more data from our data providers. And you can analyze stocks alongside with the analysts, mods, and myself. AMD. Oh, that is a good one to look at. AMD I was also bearish on, but not as much as NVIDIA. AMD is in way better shape than NVIDIA because AMD is not spending money like a bunch of crazy people. NVIDIA is hemorrhaging money, trying to spend it all on quantum computing technology, and it's all money they don't have. So, like, they are throwing cash into a furnace right now. So I'm super bearish on NVIDIA. By next year, I think they're going to be selling bonds and taking on huge debt. So that's where I think NVIDIA is going. AMD I'm much more optimistic for because they just do business smarter. They're a lot more methodical, and they're not investing into these big YOLO these big YOLO moves. So I'll tell you what, guys. I'm going to come back for in just a few minutes. I need to get a coffee. I'm going to play a quick ad. I'll be right back, and I'll go ahead. I've got my list of tickers. I'll go through these with you guys, and then we'll close out the stream. Okay. I'll see you guys in just a couple minutes. All right, guys, I am back. Thank you guys for your patience. I've got a fresh cup of coffee. We're only going to be streaming for another 20 minutes, I think, and then I'm going to head over to the trading floor, probably do a little bit of analysis and try to enjoy my vacation from work. um, but let me go ahead and do some more analysis for you guys on a few other tickers. Let's see. Charge point. Yeah, charge point. I would see look for a bounce here very soon, around 950. Look for a psychological level of support. If you do see it bounce off of a psychological level of support or one of its lows, like this is the lowest low. It IPO'd back here. This is a good zone to capture some strength. So just be paying attention to it and keep an eye on it on both the daily and the weekly. A lot of people don't look at the weekly time frames, but if you use MACD like I do, like the weekly MACD crossovers are very, very significant, and you're about to get one as long as it doesn't reject here. Like it's starting to get it's kind of rejecting here. That scares me a little bit, actually. So this tells me that it's still got further down to go, and the volume direction candles are channeling down as well. RSI on the weekly is getting punished too. So these are all signs that tell you it's not done going down. So give it time and be patient, and then look for the daily and the weekly to turn around for this one. Until that happens, either just trade something else or go short on it, or whatever you want to do. It's up to you. If it's a company that you're investing in for the long term and you don't want to think about it, then you shouldn't even be paying attention to the chart. You just buy the stock, wait for the next 5 years, and just forget about it. That's how you should think about investing. If you're investing in something, like you're doing the whole Warren Buffett thing, you shouldn't be looking at the chart every day or even a month. It's something that like you don't even think exists. I find it helpful if you have like an investment portfolio account and you just buy something on that account. You put money in it that you want to invest with, buy that specific stock, close that account, and just don't look at it until you're ready to buy something else. That's the proper investment. Like that's classic investing right there. You look for a value stock at a cheap price and you buy it and just wait for 5 years. That's my idea for Biora as an example. Michael Jones is speaking of which was asking about Biora. I'm going to cover a couple of these first, and then I'll go back to Biora. So stick around. I will check that one out. Paolo, I'm sorry to hear that, homie. Not touching anything. I'm done. Just waiting for the recovery of the market. No more dry powder. I'm sorry, dude. That's fair. If the market has not been kind to you, especially in a bear market, it's honestly better not to trade it. It's not something I don't think that people should force themselves to trade. It's not good for your mental health or for your finances to trade a market that you aren't comfortable in um, or if it's causing you more stress than you can tolerate. Because if that messes with your mentality enough, then it's going to affect your performance. It's not something you should force yourself to do. Hey, yes, I did cover Cosm. You can go back to close to the beginning of the stream. It was after I covered AMC. I covered in the first half hour of the stream. I covered GameStop, then AMC, then Cosmo. You can check the watermark in the back of my chart here to see when it shows up on my stream. Hey, Fitzy, nice to see you, homie. Good to see you again. Misty says this is an interesting day. I guess Santa lost his oomph. Yeah, for me AMC was for me AMC is the original squeeze is over, I guess. And I should have been ready to admit that a long time ago, but that doesn't mean that it doesn't have value. And for people who are willing to invest in something for the long term, I mean, keep in mind, AMC started as a movement to save the company. It originally was about saving AMC, the theater chain. It wasn't about like squeezing shorts or anything like that. It was just like, we want AMC to survive. And then GameStop squeezed, and so did AMC. It was kind of crazy. Is GME in a descending triangle bearish? No, not 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 on this time frame that I can see. Are you talking about like on the daily chart? It kind of looks like one, but to be honest with you, it just looks like a symmetrical structure. Yeah. For me, this one is just a range structure. It's not really showing bullish or bearish. If anything, I'm expecting a bullish move just because when it's at the bottom of this structure is when it goes and chases the top again. Every time it hits the top, it goes back to the bottom. And, it's just done that. So for me, GameStop, I'm long on because of the or my mindset is long. I don't have a position, but when I look at this, it tempts me to go long just because of where it's trading in its chart and its behavior in the past. So GameStop is in pretty good shape. Um, I think that it's doing just fine, and I don't see a descending triangle. If you want to send me a screenshot on the Discord, though, I'd be happy to take a look at it. I could be missing something. Yeah. I'll see you when you get back, Fitzy. Okay, Nuclear Moas says, I buy and I hold. It's a simple strategy when you know you're buying undervalued companies that will be around for the next 25 years. That's the classic investor mindset. There's nothing wrong with that. That's perfectly reasonable to do. I think that's a really good attitude. If you are investing in something that you're willing to hold for the next 5, 10, 20 years because you see it as undervalued and you see long-term potential in it, that's great. That's how you build wealth. Hooch asked, do you think AMC to 10 really? My last target on it was $8 actually. But yeah, the setup for this AMC does seem to be forming what could be. It could either be a descending triangle, but I think it's more of a descending wedge. If I draw along the bodies of the candles, I think it's more of a wedge. But the way that I am looking at AMC on the weekly, I think it's near the bottom of its chart. It's just a question of whether it's going to hold this support or not. So far, it hasn't broken support, but it has broken this double bottom pattern because it closed below it, which is not good, but it doesn't mean that it's over. For me, my next anticipated move for AMC on the weekly chart would be a run back to the top of this descending wedge. And that would put it right at about $8, $8.50 or so. This is where the resistance is at. So that would be my trade for AMC. And I would probably just have a pretty tight stop loss on this one. Go for a 4-to-1 risk to reward ratio on this. Yeah, as long as I see the next, as long as I don't see another candle breaking this descending wedge, then this is a good buying zone for me on AMC. The only thing you have to be really careful of is that now you have a MACD cross down and still waiting for the volume direction candles to show bullishness. The one thing that I will say is quite bullish for AMC is that you got this descending volume on very, very powerful downward price action. That usually is an indication of bullishness and that bears are weakening and bulls are just standing on the side waiting to take a position. That's the market psychology of that behavior. You've also got bullish divergence here, which I like bullish divergence. Lower lows on the price chart and higher lows in the RSI. Those are all bullish signals for me. This one, if it bounces here, will create another bullish divergence, and then that will confirm my expected move to the upside. So that'll be my trade for AMC. SMMT ran and getting destroyed now. Are they on the threshold list? Mela, I'll take a look at it. I know what your name means now, so I don't say it on stream anymore, but I know who you are. I've seen you. All right, SMMT. We'll take a look at that one. Hey, Nickel, I didn't say anything about AMC not running. I think that it's very close to a bottom right now. I'm just waiting for that confirmation bounce. Okay, so SMMT is not moving after this big push. Shorts are doing all kinds of interesting things in this one. This one got really volatile. Hey, Joe. Joe asked, being down 83% on GMVD, I should wait for catalyst or bankruptcy. Not selling for write-off. I think I can only write off $3K a year anyway, and I'm worse than that in GMVD. I'm really sorry, dude. So bankruptcy, yeah, bankruptcy would basically be the moment to get out. There's no saving it at that point because your equity is going to evaporate and get eaten alive by debtors or the creditors. Sorry. My best. It sucks, man. I don't know what GMVD's catalysts even would be at this point. I don't even know what the company is working on or building. The only thing that I knew about it is that their short interest was really high and the short exempts started getting ridiculous, and we found out it was because of dilution. The company was diluting secretly and never disclosing it. If there's ever an opportunity to jump in on a class action lawsuit against GMVD, you could try talking to lawyers that are willing to go after them, but it probably won't get much. The best thing that I can suggest to you is that if you have a year where you have significant gains, sell it then. If you do end up getting gains where you can write off your losses, then sell it during that year. And then you can get a tax relief on it by reducing your capital gains. Because your total capital gains tax will be it will be calculated based on your net performance. So if you have a net gain on the year and you sell your GMVD for a loss, then that loss will subtract from your net total on the year, and you can get a tax break. Definitely talk to a tax advisor before doing anything, and get their opinion. I'm not a tax professional. I've just been in your position before. So it's a good idea to try and get the most you can on your taxes whenever you have that situation. Okay? So I wish you the best of luck, dude. If there is anything that If there's anything that I learned, it is that the most painful and the most difficult loss, and it can be perhaps the most valuable lesson that you experience in the market. It teaches you a lot about what you can handle, and it teaches you a lot about what mistakes not to make. So I wish you the best of luck, homie. Ape Father's main child says AMC at least has better short data now than we've seen during the first squeeze. Let's put that to the test, actually. I'll take a look at AMC on Ortex. I've got Ortex up here right now. I'm not going to have time to look at any more tickers. I'm going to close on AMC. Hey, Fitzy, glad you like the analysis. Hopefully that does play out to our favor. Okay. So, yeah, AMC's short data. Well, it's a stretch to say that the short data is better than it was back in 2020 before the first squeeze. I guess that might account if you calculate the total number of shorts that are in the position versus the percentage of the free float. I guess what I could say is that the one thing that the reason why I like to look at percentage of shorts of free float versus total shares is because the total shares will tell you how much equity is sold short against the company, but the percentage of free float will tell you how much supply is being reserved in the market to short positions. And that is something worth paying attention to. Supply starvation of shares tends to be more. I've noticed in all the squeezes that I've called that the ones that have the least amount of shares available between shorts and naked call sellers to go around, those are the ones that have the most violent price action. Thank you guys so much for being a part of the stream. Listen, I really appreciate it if you guys would be sure to leave a like on the stream. It really helps out the YouTube algorithm. It'll help get us out to other people who are interested in learning this stuff, and share our stuff on social media. It helps out the channel. We're always looking to grow and help people learn. I'll be trying my hardest to get more of these streams up more often so that we can get this kind of content out in front of everybody and we can all learn how to play this market together. Hey, Nickel. So I'm about to close the stream, but I'll address your question, I guess. So when I say that AMC, the big squeeze occurred already, like this was it for me. Okay. Um, when when this happened, I know that it's hard to look at the data at that time and say like conclusively that shorts got squeezed out because you're only looking at it on daily. But the whole time that this was happening, you had old shorts getting out of their positions and you had new shorts getting in. And you can look at this by looking at days on loan. The days on loan here dropped massively after AMC hit its peak, and it was like moving at around $50-$60 range. The age on loan dropped massively as short interest increased. This was a whole bunch of new shorts getting their positions and old shorts getting out. So they traded positions. And that means that the new shorts are coming in with fresh cash and the old shorts are taking their losses. So the pressure isn't the same as it was before. And then since that happened, short interest only continued to grow from that point forward as AMC was going down, 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 down. Now, short interest is still pretty high, and they're still, I think, being greedy about it. But all the same, there is a lot of short interest in AMC. But for it to squeeze the same way that it did before, you need to see a whole lot of shorts that are in their positions, collectively down around $9 start to get squeezed out of their positions once AMC starts climbing past 9, 10, 12, 15, 13, or $15, $20, and continuously moving to the upside. That's what will have to happen to create that kind of a move again. And it doesn't mean that it can't happen, but there are a lot of there are a lot of things that have to happen between now and then for it to occur. So I just want to make sure that everybody is keeping their expectations in check. But I will say that I love the data and what it's showing on AMC. I'm waiting for it to end up on the threshold list again before we start seeing like some similar, explosive moves. Right now, AMC's short availability is at a low, very, very low, according to IBKR availability. And the cost to borrow is rising very fast. Days to cover, very high. So if there was an opportunity to get into AMC at a low point, it's probably pretty soon, if not right now. So those are just my thoughts. But yes, cost to borrow is very high and days to cover are very high. It can happen. Totally can. But just recognize that any squeeze that occurs now is going to be different from the squeeze that occurred in June. Don't treat them as one of the same. They are each their own separate events. Whether or not there are naked shorts, and there probably are, because there always are, but treat them as their own event separately, always. Okay? That's going to be it for this stream, guys. I want to thank you guys so much for watching. I really appreciate you being here. Once again, if you wouldn't mind leaving a like on your way out the door, subscribe to the channel if you would like to get alerted anytime that you want to be part of our streams in the future. And if you would like to learn more about how to analyze the market and make it work for you, consider joining Hell's Trading Floor at hellstradingfloor.com, where you can join our Discord at discord.gg/Hell's Trading Floor. Thank you guys so much for being here. I look forward to seeing you next time. But until then, Merry Christmas and have a hell of a time in the markets.